If you look at 2016, we ended the year by doing what we call the Ministry of Petroleum scorecard, which was a first attempt to look at really what did we deliver in 2016. And the essence of what we did was to ensure that everybody who's been on this road journey with us will be able to travel with us on this train of difficulties and see where we failed and where we succeeded. And that those who are actually delivering those services will suddenly get conscious of the fact that we serve at the mercy of the electorate, we serve at the mercy of Nigerians. And so we have a responsibility to continue to account. But more important, it was a way of a stakeholder inclusion. How do we ensure that all of you understand what we're doing, what we're trying to do, where we're going, what mistakes we make, and how we're trying to correct them? But again, it was an element of transparency, because for so long, the oil industry had been hidden in this opaque, never accounting type of structure. We broke that in 2015, 2016. We said for once, we're going to be able to account to Nigerian people for how we manage their resources, because at the end of the day, these resources belong to you, they don't belong to us. In 2016, let me go with you some of the notable achievements that I think we recorded. The first was through the instrumentality of the presidency. His Excellency was able to find time to help us launch one of the major road-shaping projects of 2016, for 2017, and that was the launching of the 7 big wins. The essence of the 7 big wins was to set the path for us in terms of what we need to do, the key things we need to focus on to reposition what was obviously becoming a dying oil industry. We were able to sign, for example, the JVs following that, historic framework on how we're going to fund the JV, the joint ventures, which Dato has struggled in terms of funding, and so oil production was declining at a very accelerated curve. With this, in 2017, we expect to see a bullish re-entry by the majors and everybody else into the oil industry trying to find reserves. We did extensive work on instituting policy reforms with special focus on petroleum industry governance bill. We created new oil and gas policies. We're finalizing fiscal policies. All this will be looked at by the executive and pushed out as the basis upon which we're going to look at the new PIB. So suddenly, whatever we're doing, we're trying to provide long-term sustainable policies that will drive them even after we're gone from here. We embarked on market liberalization of the downstream sector. And for the first time, I'm sure at least you would notice that fuel was available all over the country and that it was available about the same price. You didn't have people in the East paying ridiculous figures, where people in the West were paying lower figures. It was available, same price all over the place. You could drive into your filling station. For the first time in over 2 decades. That was a major achievement. But that was as a result of the market liberalization that we had done earlier in the year. And one of the nice things about that is that suddenly we found that the consumption of our PMS on a daily basis has shifted from above 50 million litres a day to about 28 million litres a day, which means that we've basically taken away an unaccounted excess fraud-impacted volume of nearly 40% of consumption. If you translate that to what it does for your foreign exchange survivability, it is massive. We thank the President for helping us do this. We'll look at Nigerian content achievement. How did we get Nigerians to participate in the oil and gas industry? We witnessed a steady increase of 180% from 15 to 42 Nigerian content compliance certificates being issued by NCMB between January and November 2016. The Nigerian content level on projects increased by 20.8% from 35% in 2015 to 55.8% as at the end of third quarter 2016. On Niger Delta, which was the big elephant in the room, we continue to look for policies on how to address those. Policies included a fairly well-managed security apparatus that enabled us to maintain better peace, and we thank the people in the military for all the help on that. But more fundamental was that engagement, although it was not celebrated, was very intensive in the operational areas. And so you found a relative peace in Niger Delta. We started from an all-low production point of 1.3 million barrels and rose to about 1.9 million barrels. Hopefully, if we can sustain that pace, which has been very robust in the last 1 month, you will see we'll be able to get back to our production. So you look at all those and say, then what's for 2017? 2017, we're going to be running with rocket pace. We have so much to do. We're going to ask you to join this, join this, call it a firefight, a massive airplane that is going to be running at neck break speed just to achieve certain things. We're going to be passengers in it together, ourselves, the service providers, yourself, the stakeholders and owners. One of the things we're going to focus on, first of all, we're going to firm up our policies, be able to gazette all our oil and gas policies, and then pass the PIB. We're going to accelerate federal government revenues, look into areas where we could have made more money and the federal government has been losing low-hanging fruits. We're going to be looking at that so we can support the 2017 financing through royalties, improvement in royalty collections, improvement in through early renewal of leases, and through every other area where we feel that there's a bit of a gap. We're going to be seeking to attract investments and complete all the MOUs that will be begun, the one in China, the one in India. We're looking to do a roadshow to the UK for Europe. We're looking to do a roadshow to the US with Donald Trump coming in now, President Donald Trump. And we're also going to be looking, quite frankly, to draw on the relationship that the president has built over time and do a roadshow to the Gulf. So that suddenly Nigeria ceases to be a simple, forgotten state to one of an active participation bloc where investments can flow into this country. We're going to be conducting oil blocks allocation and marginal fuels awards to try and raise money for the government and get you invested in some of those sectors. Gas revolution is going to be key for us. First, we'd like to track gas flare and commercialize it so that no more flare happens in this country. We've set a 2020 date for ourselves, even though the international fora, the UN, has set a 2030 date. We're very aggressive about this. We want to make money from flare. We want to look at our gas infrastructures that are suffering. Some of them have been constructions going on for over 10 years. We need to move on. We need to find out how to complete these investments and suddenly begin to get gas to flow in every part of the country, because that is key to the power delivery. We need to start the refinery revamp. The president is giving us a marching order on that. We still remain committed to our goal of 2018, reduce importation by 60%, and 2019 try and exit importation of petroleum products substantially. But over and above that, we need to begin to diversify this refining process to be able to touch petrochemicals, touch all manners of potential subsector deliveries, so dirty oil, clean oil, and all that, so that refineries finally can work. And we have marching orders to do that. We hope to start that whole process this year. Now, we're going to continue to focus on downstream issues, because although we've liberalized, there are still some challenges. The reality is that marketers are still suffering because the price at which the products are landing are slightly less than the price at which they're selling. We're going to see how we work within the liberalization infrastructure such that we're able to take away the low-hanging difficulties. We're going to have to focus on Niger Delta. It's been too long a lingering issue. We're going to be working with every aspect of the presidency to try and find solutions to this. We're going to work to stabilize oil production. 58 is beautiful. 65 is even more excellent. But to keep that, a lot of work is required. Work in engagement, work in cost-cutting, work in business environment development, and work in substantial diplomacy. We're going to be working on those. Begin for the first time to track oil production from production to destination. There are too many seepages, too many leakages, too many stories about produced oil in Nigeria. This year, we're going to commit to trying to find a way of tracking our oil so that from the moment one molecule is produced to the time when it is sold and where it is sold, we'll be able to track that. If we do that, we envisage billions of dollars in savings for the federal government. We're going to develop agreements and framework for attachment opportunities with IOCs and partners so that we all can work collaboratively. It is no longer an adversarial role. We've got to work as partners. We're going to force them through very engaging policies to bring in investments into this country. I am told that with the JV cash call sign-off, we're looking at investments in excess of $10 to $15 billion over the next 2-3 years. I'm going to be working with them very collaboratively to deliver this. Now, obviously, cash call rollout we've started, we need to complete the loose ends of it. We need to pay what is outstanding for the federal government. We need to put the governance structures in place. We need to be able to work with these partners to finally begin to run an oil industry on a best practice, world best practice level. We need to develop and publish periodic information newsletter and set up feedback mechanism for the public and stakeholders. So it's a huge amount of things that we're taking on for 2017. Now, does that frighten us? No. And I hope it doesn't you, because you're part of the Rider Club in this journey. Rather, let us be invigorated, let us be energized, let us be futuristic in the hope that we can achieve all this. So, where do we end? For me, key issues, investor relations. We've got to make sure that our investors find Nigeria as the most comfortable place to drop their billions of dollars before they go anywhere else. So whatever regulatory overhangs, whatever policy somersaults and difficulties they have, I'm going to work with them to solve this. I'm beginning my first roadshow with investors by going to Italy, for example, to meet with Ajib, and I'm going to do that around the clock for the 5 or 6 producers. And the same benefits will translate also to local producers. We're going to firm up long-term markets. We must stop the year-to-year crude terms, contracts, gas sales. We've got to go to long-term markets. That's what everybody in the world is doing. Nobody's letting their oil circulate and be priced inappropriately on international markets. You've got to find who are your long-term partners, what do they want, how do you sign 5, 6, 7-year strategic relationships. We're going to be working on those and gravitate away from the year-to-year contracts that you see prevalent in this industry. We've got to move to a private sector-led industry. So far, it's been a public sector-led, and a lot of difficulties we've had is this public sector dominance. Public sector is key to be able to regulate the sector and make sure people are operating within parameters. But ultimately, the infrastructure has to be private sector-led. The investments has to be private sector-led. The services have to be private sector-led. The discipline has to be private sector-led.